Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Friday, May the 11th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, then we drill down to our trade plan and our hypotheses. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and we do live trading and analysis during the course of the trading day. This video is going to be about 25 minutes long. I know those are long videos. It's going to be about 15 minutes of context leading up to my hypotheses. We do create multiple hypotheses. These are our trade plans. We do this because we do not know what the market's going to do. So we create a plan based on who takes control, buyers or sellers, and then we execute the plan once we see what the market is doing. And then we have two alternative hypotheses, which are our trend type scenarios. And we've been seeing a lot of the hypo 3s and hypo 4s playing out in the market lately. So let's read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Looking at yesterday, our hypo 1 was an open auction out of range, a move down to test the prior day range, maybe even to 98 to 96, then find buyers, move up through 27, take out the overnight high at the 2706, and then push up to 2710 to maybe the 2714 to 18 area. That was hypo 1. Hypo 3 was a gap and go, an open test drive down, failure to take out the gap, maybe fill the half gap, then move up to the 2706, push to the 2710, up to the 18, and get a late day probe up into the 25 to 27 range. And hypo 3 is exactly what we got. It was a combination of the hypo 1, but leaving the gap alone, failing to get into the prior day range. This is the same thing that we saw. We did not fill the gap on Wednesday either. We opened auction out of range. They pushed up into the trade area at the 2709 area, came back, held the 2703.50 level, and then buyers stepped in. Mr. Sneaky, FUBAR Mr. Sneaky, right? Well, this wasn't exactly a FUBAR Mr. Sneaky, but it was a Mr. Sneaky, and you got the big move up into the trade area, and then from there they just exploded and grinded up on low volume. You can see that yesterday the volume for the most part was lower than the average, and we only had like 998,000 contracts in the RTH session, where the norm is about 1,000,002. So we just grinded up on low volume, got up into this 18, 19 area we were talking about for hypo 3, and then we did get a probe up into the 25, but for the most part they came up and accepted value. And this is a very important area, and I'm going to talk about this in just a few minutes of why this is such an important area to hold. So let's just take a look at the economic news. We had news at 8:30. Export price index came out better than expected. Bullard speaking somewhere. I don't know where he's speaking from the Fed. Import price index came out at 3.3 versus 3.9. Employment change in Canada came out at 1.1 thousand less than expected. The full employment came out at 28.8. That is seriously below the previous. And part-time unemployment came out at -30 versus -35 the last time. Participation rate 65.4 versus 65.5. So really not great news out of Canada. In 19 minutes, we've got the Bank of Canada, Pelosi speaking. Sorry, it's Wilkins now. Yeah, Wilkins speaking. We've got ECB in 24 minutes with Draghi speaking. And then 10 o'clock, we've got Michigan consumer sentiment and expectation reports coming out. 10:30, we've got the ECR weekly, and then 1 o'clock, we've got the rig count, Baker Hughes, and that's about all the big news for the scheduled news today. Of course, there's lots of headline news these days with Trump and Iran and North Korea and China and Russia, and just volatility. I love volatility. Now, each morning I like to start my day, and what I do is I use a simple candlestick chart, and I start on the monthly. I do this each morning. It's very rudimentary, but it's important step to do each day to make sure you've got yourself, outside of your bias and thinking from the big picture in. I use a 9 EMA, a 20 SMA. What I'm looking for is slope and separation to the upside for the strengths of the trend. Is price paralleling the 9 nicely? Is it coming down and testing the 9, or is it violating the 20 and possibly starting a trend change? Of course, the upward trend has been very strong on the longer time frame. We had 14 months of one time framing up, and then in February we violated the one time frame and challenged the trend, and we continue to challenge the trend each month, but we are not violating it, and we keep popping right back up. And of course, a key point is the high from April at 1850. Again, one of the reasons why that 1850 is going to be a very important level for us. We're above that right now, so we're breaking above the prior month high, which we have not done for the last 3 months. So this is showing that we've got a possible continuation, and if we hold this 18 area, it's going to be our over-under line today. I'm looking for continuation up, although we have had some strong moves, so I wouldn't put past coming back down. On the weekly, we had this beautiful upward trend, and then they violated it, and they've been fighting it, but it looked like we were going to get a trend change a few weeks ago, and then they just kept on battling, and now look what's happening. They're taking it back, and we're above the 9 and the 20 and looking for a possible continuation of the trend up on the weekly. Going to the daily, same thing. We had this stair stepping coming down. It looked like we were going to get a trend change, and they were back below the 9 and the 20. What do? They take it back, and now we're starting to get the possibility of a continuation of the trend up on the daily. Going to the intraday, the 4-hour, you can see that clearly in the last few sessions, we've had a really nice start of the trend, good slope, good separation, a little bit of a technical gap here, and we could come back into this 18 to 16 area to challenge the 9 and challenge the key level that I was just talking about. But for the most part, the trend is up. On the 30-minute, coming into the RTH session, you can see that we are balancing out here in around the 22. The VPOC has shifted up again, and we're looking at coming back and accepting value higher before we get a continuation move if we hold this level at that 18. So taking a look at the big picture structure. And again, I'm just going to give a little bit of context so that you understand where I'm coming from and why my hypos are going to be where they are. We had the start of the trend down here. They move all the way up into this 28.80, 25. The Globex all-time high is 28.83 and a quarter versus the all-time high in the RTH at 28.80 and a quarter, adjusted to the June contract. But this is what we call an unequalized all-time high. And statistically speaking, unequalized all-time highs do not have a tendency to hold. The RTH will go up into that Globex all-time high and equalize it out. Then we try to hold value up here in the 28.31 area. We gap down and we gap down again, and we get this big move down to this 25.35 and a quarter. It's actually 25.29, which was put into the Globex. And then we come back in, take a trip through value, and then we try to break these, and we were getting higher highs, but we broke the fractal low, and then we could not hold above, and we came back in. And then once we're in this value area, and this value area is pretty large, okay, goes from the 27.18.50 area down to the 25.90.50 area, and all we've been doing is just chopping back and forth in this large area and creating this value which is undetermined. What do I mean by that? I mean that there's no really kurtosis around any one of these levels, and the microcomposite VPOC, although it is back up at that 69 area, it was chopping between the 57 and the 47 area, and it's just gone back and forth, and this area is still undetermined. But we came back up, we accepted the 69, we gapped up, okay, we broke out of the smaller time frame value area that we were talking about, which was at that 81 level. And once we broke out of that, we made the trip up to the last place we tried to hold value, which was at 27.0675 area. Accepted that yesterday on the gap up, and here we broke out of the value and came up into that 25 area that I was talking about yesterday morning. And since then, you know, we've just been chopping around in this area. So the 1850 area is going to become very important. It's our over under level. It is our April high, month high. It's the Globex. It's a VPOC. I mean, it's got all kinds of things. So this is going to be a very important level to watch. If we do not hold this level, look for them to move down into yesterday's lower distribution, and probably move back down to this 27.0650 area, and get a inside day and a just a balancing day as we try to hold value higher. Key line in the sand below is going to be this 27.03 to 27.06 area. And if we get below that, then I'm looking for a move into the mid of the gap, which is at 150, and possibly come down and test this 91.75 area. If we do hold the 18 and we can break above the 25 and get back above yesterday's range high, look for the Globex high to get taken out, which is up at 26.75, and a push up into this 30 to 32 level. There's two former micro composite VPOCs up here in the 32 and 33 and a quarter, I believe they are, which are basically, centered around this HVN at 30.75, and the key line in the sand above is going to be this 27.41.75. Above that, I'm looking for a move back up into the 50s and 57 area, and coming back to test the 5-day microcomposite VPOC up here, which is at the 57. So that's the big picture. Let's take a look at what's happened overnight. Overnight, we opened auction in range. We had the VPOC from yesterday at that 1975. They came down and tested the LVN at the 16 and a quarter, found buyers, went up into the 19, sold off, but they basically held the VWAP, and then they moved up and they came up into the 23 area and just went sideways, and then we came back down and tested that 16 area, but we had a one tick failed auction where they did not break below that. They held it, and then we held it again at 17, and they Europe just opens up and we start grinding all the way up, put a new high in at 26.75, fail to hold, and come back and chop around that 22 area again. And now we're getting a double distribution with the LVN in around the 20 area, and we're accepting value higher. So the VPOCs are shifting higher as we move up, and possibility of the breakout of this very big value area on the microcomposite. This microcomposite runs from the breakdown day here of February the 2nd. So what am I looking for in terms of levels? Well, I've got most of my levels on. First of all, let's deal with the daily ATR. The 20-period full session average true range is running at 34.60. So off of the overnight low of 16.25. And do I have the overnight low in? Yes, I do. Our upside daily ATR is up at 27.50.75. Now, this we've seen happen quite a bit lately, where the daily upside ATR is above the weekly ATR. What was the week low? I think 91 something. Hold on a second. The week low was 26.52.25. So the weekly ATR is running, the average true range is running at 93.65 right now. So the weekly upside ATR target is up at 46, but the daily puts us breaking and expanding the weekly range. Critical mass. Critical mass, our week open is 26.62.75. We've got one session left in the week. Add the average true range of 34.60, and our weekly critical mass is down here at 26.97.25, which means that we're above critical mass. And if we hold, above this 1850 area, don't fade the close, because we're above critical mass. Critical mass theory is if there's no way for the week to become negative in this scenario, then the likelihood the sellers step aside and we float up on low volume and grind higher. So you want to be careful about fading as we move into the afternoon. So our overnight high is 26.75. So our daily downside ATR is down here at the 92.25. And I'm putting the key line in the sand down here, because if we don't hold the 91.25, it puts us back below the last VPOC that we were accepting value in, and we're liable to move down through back into the 69 again. So just even though we're gapping up and going, we've had a large move on low volume. Just be careful. There could be a quick sell-off to take out some weak hands and run some stops. So in terms of hypotheses, my hypo 1 is really same thing. It's been open, only this time we're going to be back inside of the auction. The value area yesterday, because it was a trend day, is not really valued. We did not really accept value and create a Gaussian distribution. So the value area doesn't mean a lot to me. We do have the Globex LVN here at 23.25. I'm looking for an open auction in range, a move down to test this 1850 area. It's somewhere between the 1850 and the 1550. I'm looking for buyers to step in, rotate us up through the Globex session, lower distribution, chop around in the LVN to the 25, and then push up. And my target is going to be the Fed, the scene of the crime on the FOMC announcement, and up here in that 30.75 to 33 area. We've got the HVN there. We've got the scene of the crime. We've got the two former microcomposite VPOCs at 30. This should say 32 and 30. It should be 32 and 33.50. So that's my main target for hypo 1. And I'm expecting to chop around here and go sideways into the close. Hypo 2 is going to be an open auction in range, a push up and a false breakout, possibly take out the overnight high, and then find sellers, rotate us down into this 19 area, chop in here, and then push down and come back down into this area right here, the low distribution area, chop around down here and push down and close somewhere down here in the 2706 area. Maybe a late day probe back into testing the gap, mid of the gap and the centennial number, but basically closing in around the 2706.50. That is hypo 2. Hypo 3 is going to be a gap and go, but it's not a big gap. Okay, but we failure to take out the naked close at 2718.50, push right up into the overnight high, chop, fighting the overnight high and the high from the prior day, and then pushing up into the 33, chopping in here, and then drift up into the end of the week and the close on critical mass and testing this 41.75, but ultimately coming back and settling somewhere in between the 30 and the 35. That is my hypo 3. Hypo 4 is going to be the best scenario if it happens, because it's going to be very seriously to the downside, and that's an open auction in range, failure to take out the overnight high, push down into the overnight low, fail, push down into the 26.50, push into the gap zone, and then fail the 2700 and come down here and test the 91 area, possibly coming down into the lower 80s. And I'm not going to put it out of my mind because it could be a big down day. And I think we'd have to take some news, but down back into the, and this should be 28.50, 28.75, bring us back down into that 69 area. It's less likely that's going to happen, but if we do not hold the 2700s, okay, look for them to push down to the 96 to the 91 area at least. And if we fail this 91, then you could get a liquidation break and a bigger move and take back this whole 3-day move up and take these gaps back out. So that's going to be my main hypotheses for the ES. Take a quick look at gold. Gold, we were talking about yesterday that it was range bound and chopping, and that there wasn't really anything to do until we broke above this 1990 or below this 1304, and the direction would be given with the breakout. I said if we broke the 19, we'd like to push up into the 25 to 29 area, and that's exactly what we've done in the Globex so far. And we're coming up and we're chopping around this microcomposite VPOC in the 25 area. If we can accept this, look for them to push up into the 29, possibly even get a trend going into the 34 to test the upper side of this distribution. If we fail here, look for them to rotate back down into the 21 to 19 area and see if they bounce and hold this area for another rotation up to the 25. Anything below the 19 that fails and does not pop right back up, the destination is back down here in the 1440 area, and possibly even a trip through value down into the 1309 area. That's what I'm looking at gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. Remember that this is going to be the last day of the free session on the go-to in the pre-market. The video will still go up, but it won't go up until into the RTH session. If you want a free trial into the room, send me an email at quantumleapfutures@gmail.com. Everybody have a great day. It's Friday. Remember, keep it tight and light. The worst thing to do is to lose on a Friday because there's nothing you can do about it until Sunday night or Monday morning, depending on when your trading hours are. Everybody have a great weekend and have a good trading day. Thank you.